Today I got long on NVDA and Amazon, and I'm going to share with you why I took this trade. So this is a very potent but simple strategy. Basically, on the weekly, I look for a strong trending market. Then I look for that market to become, in the case of longs, I look for it to become undervalued relative to the price of gold or bonds. So that's what this first indicator tells us, is the valuation of the asset compared to the price of gold and bonds. And in this case, NVIDIA became undervalued relative to the price of gold and bonds. So the thinking is, if you're in a strong uptrend and things become undervalued, it's a great time to look to buy. And along the same, in the same kind of vein of train of thought, we're in an uptrend. If we become oversold, that again is also a great time to look to buy. So that condition is in the marketplace today. On the daily, we had a qualified trend line break, which happened right here. Connected these two short-term highs, price got up to the qualified trend line. So basically, we then take the entry price right there minus 120% of the current ATR, 3-bar ATR. So this is the down here, this is the ATR set to 3 period times 1.2. That's the amount that you add or subtract your position for your stop. Same idea got me long AVGO, undervalued versus gold, oversold on the RSI, and then we had a 3-bar trail entry right there. The exact same idea is why I have resting orders in the market too long. Google, Pinterest, which got absolutely decimated today, which incredible sell-off, wow, and Amazon. I had another list of stocks too long based on this same idea: Deckers, Microsoft, Netflix, TT, ANET, Meta, and Costco. I ended up going with the list that you saw first, these 5, based on, I first identified the ones with the lowest forward PE. From that list, I narrowed it down more to the ones with the lowest price to sales. And from that narrowed down list, I identified the stocks with the lowest price, period. And I picked the 5 lowest price ones out after those 2 criteria were sorted. So that's why I have, so we'll just look at Google, undervalued versus gold, oversold, looking for entries. Pinterest, undervalued versus gold and bonds, oversold, looking for entries in the marketplace on the daily. And then Amazon, undervalued versus gold and bonds, and oversold. So that is the reason for my orders and entries in the stock market. I also got filled on a long on silver a couple days ago. To show you this trade, I'm going to go into the rolling contract because the front month doesn't, well, on the micro that I'm trading, doesn't have a whole lot of price data. So in this case, we see silver, the moving averages are sloping up and away from each other. Prices pulled back and become undervalued versus gold and oversold on the RSI. So I got the same trade set up on copper. So uptrend, undervalued, oversold. However, I ended up going with silver because it is relatively stronger than copper, and I'll show you what I mean. So I have April 29th, the highs of the week of April 29th marked off here. You can see silver's just traded down to them in the last few weeks, and it's kind of holding that area of support. If I switch over to copper, you can see a long time ago, like several weeks ago, copper traded through those levels and way below them. So relatively, copper is relatively weak, or another way of saying it is silver has relative strength. So I chose to long silver based off of a qualified trend line break, which happened here. Monday's candle closed as a down close, which made it qualify this trend line a qualified entry point, which I entered on right there. So that is kind of the thinking for the silver trade, as well as the stock market trades. So it's a pretty simple approach, but it's super potent. And who knows, maybe these trades aren't going to play out. Sometimes this approach, you get stopped out once before the actual move commences. Or who knows, maybe this is a market top for all I know. I think I heard some statistics that August is seasonally always super strong, more or less, in presidential election years. We also had the FOMC today, which sounded super dovish, and maybe we get one more pump here before the interest rates start getting cut. And contrary to what a lot of people think, I think an interest rate cut would actually cause at least these primary indices like the S&P and the NAS to actually go down. But I hope this is helpful, and I will update you on how these trades go, and I will keep showing you this strategy because I think it's worth for people to know this strategy. It's incredibly easy enough for you to implement while having another full-time job or other commitments in life, like to your family. It doesn't require you to spend too much time with the charts. It's super simple. So I'll leave you with that, and you guys have a great rest of your day. Thanks.